Hi, everybody. Welcome back to the channel. My name's Nithin Thomas. It's my pleasure to introduce to you JD, who's a returning guest. And we also have Luke Daniel, who is a new guest in our show. They're both based in Houston, but they have markets across the state of Texas. First and foremost, JD, could you give a quick introduction into who you are, what you do, and why do you do it?
Hey, my name is JD. I'm a mortgage broker in Houston. Really, my job is just to educate home buyers, making probably one of the most important decisions in their life.
Perfect. Luke, can you give me a quick introduction into who you are, what you do, and why do you do it?
Yeah, for sure. My name is Luke. I'm an insurance broker. I work for a brokerage called Goosehead, and I've been doing insurance for over 2 years now. And my whole job is to make sure, hey, one of the biggest purchases that you make is protected.
Fantastic. Well, if you guys want to learn more about them, I will have their contact information in the description below. Make sure to reach out to them. You guys are most likely available 24 hours a day, 7 days a week, just like me. You know, well, sounds about right. Well, today our focus is to give you guys an introduction into, or not introduction, but give you guys a little bit a better understanding of the markets when it comes to lending as well as insurance, all related to buying a home here in the state of Texas. First and foremost, we talked a little bit more about last time when me and JD were here. We talked about rates, DSCR loans, and things related to bank statement loans and a few other things. But first, let's dig into the question that I have for you guys today. JD, what I want to know is, what are the critical steps that a buyer should take into account when they are preparing to close on a house? So from a lender's perspective, what should they keep in mind?
Well, yeah, I think the most critical steps for a buyer when they're entering this market is to make sure they're talking to a good financial planner. Good financial planners will give them the good foundations when it comes to preparing for home ownership. Then they're going to get them directed to a loan officer to help them get pre-approved, right? So during that whole process, we're going to go through the 3 pillars of lending, right? We're going to talk about their, well, not 3 pillars of lending, but 3 pillars of getting them qualified for a home, right? We're going to talk about their credit, cash to close, and their debt to income ratio. Okay, cool. So once we go over all of that, we kind of go through all the documents that are required. We review with the underwriter, and we make sure they are pre-qualified for that home.
Thank you. Luke, from your point of view, can you just, from an insurance perspective, what are the most critical steps that a buyer should take into account as they're getting closer to closing on their home?
Yeah, so what I tell most of my clients is usually they reach out to me a couple weeks before closing. And I would say most of the time, if you did find something solid early on, I would say kind of lock it in and go with it, just because the longer you wait, you never know how rates can be changed and all these things. So if you find something good, get it. We'll send it to closing where you can get it taken care of. But things change. Of course, we could change it along the way. But a lot of people wait till the end to get that done. And I do know insurance is an important part of that loan process, so that way you could get everything locked in as well for you, right?
Yeah, it makes our life easier.
Yeah.
To get that figured out, because we got to calculate that into your debt.
Yep.
What are some misconceptions that you might expect hearing from a buyer related to insurance when it comes to getting insurance for a property?
A lot of the misconceptions, honestly, one of the funniest ones that I've seen are people often ask me, hey, can we get insurance after we've closed? But no, we have to get it initially. And another one is, for us, we always write our policies based on replacement cost basis. And a lot of people don't understand that because they're like, hey, my loan amount is different than what my replacement cost is, right? Which loan amount goes with market value and all these different factors, whereas replacement cost is for the dwelling, right? It is a misconception, but that's something we always clear up with our clients.
Okay, great. What about you, JD? What common misconceptions do you see or hear about when it comes to a lender's point of view?
I think the biggest misconception that most people have is a pre-qualification letter is the same thing as a pre-approval letter. So the big difference between pre-qual and pre-approval, and most of the time with pre-qualifications, I can just give you verbal information about my situation. You listen to it, you calculate it, you're like, okay, based off of what you told me, this is what you're pre-qualified for, right? So just based off of verbal stuff that the client's telling you, you give them a pre-qual letter. Sometimes you might look at a pay stub, but it's very limited documents. But pre-approval, they're going to require all the documents up front. 9 times out of 10, they're going to do a hard credit check. They're going to have the underwriter review it with you, and something called AUS, Automatic Underwriting System, it's going to be ran on top of it. So once you have that pre-approval letter, it's pretty bulletproof. It's going to be pretty accurate to the time of closing.
Okay, nice. That's actually interesting. So we spoke about the buyer's misconceptions. Now let's shift and talk a little bit more about the market trends. So one thing that I want to mention here is when talking about the market trends, it's subject to change as day and night. So just keep in mind whenever we post these videos, the information that we're sharing with you has a high probability of changing depending on when you're listening into it. Now, with that being said, how insurance gets affected when I guess I don't know if there's a connection between rates. Please educate me on that. But also just regarding macro trends that would happen in a country, how that would filter into local markets. If you could just help the audience understand that and educate us on that.
Yeah, for sure. I mean, there's no direct correlation with the rates and like the insurance thing, but a lot of times what I am seeing now on my end is a lot of carriers are starting to open back up in areas that they did close off to, like towards the end of last year around November and December, just because of many risk factors. But now a lot of them are kind of coming back and they are opening up. So in areas where last year where we were writing for like home premiums of $1,200, towards the end of the year was around $1,900 because a lot of the good carriers left from there, right? So now a lot of them are coming back. So now is the time to kind of reshop, and that's kind of where the trends are going now.
Okay, great. Why is getting a pre-approval important for a buyer?
Oh, yeah. So when they get pre-approved, that's going to make their whole home buying process a lot more smoother, a lot more easier, especially when it comes to looking at homes. They're not wasting time at a certain price point where their pre-approval wasn't matching. And that saves time for a realtor, too. So it really helps a realtor narrow down which homes, which areas, and everything. And also based off the pre-approval, we figure out all the numbers and we kind of let the clients know, it's like, hey, this is your monthly payment, this is your budget, and this is what it is. And once they do put the offer on the home, it should be pretty close to it. It's very rare that's off.
So you mentioned putting an offer on a house. How early should someone get pre-approved before they submit an offer? Like, what's the time period from getting pre-approved to submitting an offer? Is there like a time limit?
Well, honestly, no. Like, I could pre-approve you today, and you can put an offer in like 2 minutes after.
Oh, nice.
Right, so it doesn't take too much time.
Okay.
But typically, in the home buying process, most of my realtor partners usually tell them, hey, get pre-approved maybe 30 days before we start shopping. That way we start to see what we like, and we start checking it out. And if you have something you do like, you can put an offer right then and there because you don't have to wait.
Yeah. Okay, that makes sense. How long it's good for?
So most people have a conception of, hey, it's about 120 days. It really depends on which lender you work with. There's multiple different lenders. They have different rules and regulations. Some places will only accept the credit report within 60 days. Some accept it with 90. Some accept with 30. Yeah. So really, unfortunately, it just really depends on which broker or lender you work with.
Okay, that makes sense. What would happen in the event where the Fed continues to drop rates in favor of just stimulating the economy, let's say? How would that start to make a impact on the local market? So you said application went up, so I'm assuming that would be one case. What other things do you expect from like a perspective in the future?
Really, just more people are coming to the market to buy, right? Anytime the interest rates decrease, your buying power increases. So more people are going to be able to afford that home that you're also wanting. So if you're on the fence and you can afford the home you want, get it now before the rates go down more, because that means you're competing with more people.
Yeah. That's true. And then you also price, you might be in a position where you have to overbid, like you were mentioning, in the multiple offer situation.
And if you don't have the money in your bank to pay that overbidding price, good luck.
Yeah, then you get kicked out, or like you get blocked out of the market again. What sort of factors should they keep in mind if someone's getting ready to buy a home?
Gotcha. So let's go back to the 3 pillars, right? First, it's going to be credit, right? So most of the loan products, depending on which loan product you're looking at, it's going to need anywhere from 580 plus for FHA. If you have, and some people don't know, as low as 500 for FHA too, but you have to have money to put down for conventional 620 plus, right? And for VA, according to VA handbook, there's really not a specific number, but for a healthy, like easy process, you probably want 620 plus for that. Okay. And the other pillars, right, your debt to income ratio. So it's a good time to review your credit, look at what debts you have, calculate that against your gross income per month, and that's going to help you understand your debt to income ratio.
My first question to you, Luke, is related to the types of insurance there are. So I am very new to insurance. I don't know anything about it. So imagine talking to someone who's new in the market. How would you introduce them to the insurance types that exist?
Okay. I mean, so for homeowners, I'll just start with homeowners.
Yeah.
Most of my clients don't know the type of policies and stuff there are. So in insurance, especially when it comes to properties, we have DP3s, which is like for landlord policies and all these different things. And then we also have homeowners policies, and they all have like numbers as in HO2, HO3, and all these different forms, right? For most homeowners, what I always recommend is doing a HO3 policy because it's something that protects them from like all different types of disasters except for like earthquake, war, and like flood, right? And then that's what like HO3 covers. And the cost is not that big of a difference, but you definitely do get a bang for buck from that. So that's what I recommend for most of my clients. But at the same time, to help like the process with the loan and stuff, we always try to bundle it with their auto or getting them flood or like mortgage protection. We're able to offer all these different things to just at the end of the day help them protect all of their assets.
Yeah.
So we're there for that, and we have all the different measures to make that happen.
What type of cost factors typically influence a homeowner's insurance? If you would be able to share some of those.
So most homes that I see, even if it's most people think, hey, because it is their first time buying a house, this is going to be the cheapest that it'll ever be. But there is a difference then, like the age of the house, the age of the roof. All these are factors that do influence the price. So if you were to get a new construction, like a new build, that's probably going to be one of the cheapest. And also, of course, the area also matters. I do a lot of business in Houston. So buying a house like near, like in a tier 1 county, like somewhere in Brazoria County, or like even a tier 2 county, like Fort Bend County, those counties the prices for the homes, whether it's a new construction or not, will be a lot higher than some of the other houses that are a little northern, just because those are considered coastal regions, right? So the chances of them being affected by hurricanes and stuff are a lot higher than houses that are farther away from the coast.
Imagine a case where you mentioned the tier 1, tier 2 cities. One of the tier 2 cities, I'm assuming, is higher in risk, I believe, or tier 1 is...
Tier 1 is the higher,
Okay,
and then the farther they go away.
Got it. Okay, so let's assume tier 1, a hurricane happens, since Houston is very prone to hurricanes. How does someone go through the process of claiming the sort of insurance? How does that work, like a generic way?
Yeah, I mean, a generic way most of the times is whenever something does happen, you call your insurance company and you do let them know, right? And if you do work with a brokerage like ours, for example, you just give us a call, and our claims department is solid about separating, hey, this is for your auto, this is for your home, and then they get it all taken care of. So definitely getting in touch with a claims professional is the way to go rather than trying to handle it all yourself, because it can get messy.
If you guys have any questions, make sure to drop a comment below. We're going to now wrap up our first segment and jump into our second segment. So that video will be dropping after this. If you want to learn more about us, check the description below. Gentlemen, I do want to ask, can you share how society can find you in the world?
Yeah. So for me, I'm all over social media. I'm on Facebook, Instagram. Thinking about TikTok, but we'll see. My name is Luke Daniel on Facebook, and on Instagram, Luke S. Daniel. And my email and phone number and everything should be in the description as well. But feel free to reach out.
Awesome. JD?
I'm on Facebook, LinkedIn, Instagram. First name Josh, last name David. Instagram should be mortgages_by_JD. And LinkedIn should just be Josh David. You should see Mortgage Broker on there, so you'll find me real quick there.
Awesome. Well, I'll leave all their contact details below. Thank you so much for watching. Make sure to hit the subscribe button and follow us on our social media pages. And I will see you in our next clip.